Hey everyone, it's Ryan, back with the Cayman Islands series. In today's episode, I'll be covering everything you need to know about hedge funds and giving you a little bit extra that I learned out in the Cayman Islands. Now, before I begin, if you don't know who I am or anything about the Cayman Islands, then I recommend checking out my previous episodes to make sure that you are all caught up. Anyway, with that out the way, let's begin. Hedge funds. What are they and what's so cool about them? If you've never heard the term, then don't worry because you are not alone. Now, you might have heard something called mutual funds, and they both have the similarities, but they aren't the same. The key thing with all of the funds is that they're a collection of money used usually from different sources that are put into different investments. For many people in America, mutual funds are what their retirement saving plans are based on because of the security of the fund relative to how much money it makes you. Now, hedge funds are like the high risk, higher reward version of a mutual fund. Hedge funds are known as risky alternative investments because they typically require a higher initial investment compared to most options. A hedge fund is a mutual fund, but for accredited investors, which is basically just a category for people who are rich. The definition of an accredited investor is someone who is allowed to trade unregistered securities. Now, why do hedge funds even exist? Why don't I just buy stocks or other forms of investing? A simple way to think about it is if you have a bunch of money, imagine I'm holding money in my hands right now, and I want to make more of it without doing much, then I can take all this money, give it to someone else to make money for me. But then I'll give them a little bit of the money they make as a commission. Now I'll talk about those fees in a second. But first, let's talk about the name hedge fund. Whenever I think of a hedge, I think of the bush in people's lawns. But that's not where the name came from. Hedge funds' main way of investing comes from a very specific strategy or style called hedging. To hedge a stock is a weird way of investing where you technically never have any risk at all. Hedging is when you buy a stock long and short. The way it works is like this. When you buy a stock, aka buying it long, you purchase and own the stock. Okay, I now have that stock. When I short a stock, aka buying it short, I'm borrowing the stock and I'm going to give it back at a later date. Buying long is when you want it to go up in price, buying short is when you want it to go down in price. So if the price of Apple is $100 today, then tomorrow it's 110, and if I'm buying it long, then I can sell that $10 of profit for money. If I'm holding it short, then I have to give back that extra $10 to the person I borrowed it from, which means I lost that money. Now, let's say I buy $100 worth of Apple long and $100 worth of Apple short. Okay. And then let's say the stock goes up 10. That means I now made 10, I also lose 10. So technically, I'm still at zero. I still didn't make any money, but I didn't lose any money. So I have no risk. It is a very complicated term. And if you guys want a mini reel episode, anything like that, to explain hedging further, then feel free to let me know. Who's involved? So in hedge funds, there are very many people involved, but we will focus on a main few. So first, we have the investment manager. This is usually someone who used to be an investment banker and is switching to run their own firm. So, okay, who's involved? So in hedge funds, there are very many people involved, but we will focus on a main few. First off, we have the investment manager. This is usually someone who used to be an investment manager and is now switching things up to run their own fund. They would be the person in charge of all the investments and usually have the most money inside the fund. Now, we also have our lovely investors who all have to be accredited, basically rich. Then we have the custodian who does the actual buying and selling and holding and receiving of the stocks. But all they do is listen to the investment manager. There are the hedge fund administrators. ensuring that the investment manager is doing what they said they would on the offering memorandum, which is basically a written up paper by the lawyers saying, oh, you give me this money and I'll only do this with it. Now, there are very, very many people involved. So if you're curious, leave me a comment, a message, shoot me a DM. I'm happy to answer. If you want to do any digging of your own, check out Investopedia. It's a great website and has everything you need to know. Fees. Now, with the fees, if you gave someone money to make more money for you, usually they won't do it for free. And the investment manager doesn't want to either. The fees are usually agreed with beforehand, and it's stated in the offering memorandum all the fees and everything else. A typical fee structure is the investment manager gets 2% of everything below a certain threshold and 20% of everything above it. So let's say they make your $100 go into 150. Okay, so they made you $50. They could get 2% of the first $10 and 20% of the other 40, totaling for $22 for the investment manager and 128 for you total. So technically, you made $28 and the investment manager made $22. Not a bad deal. Some other things to note about hedge funds is that they have very low liquidity because most of them only allow you to take your money out either once a year or twice a year. This increases the risk, but it also allows the hedge fund manager to play around with your money more and figure out what they want to do with it. So, higher reward. If this episode helped clear things up about what hedge funds are, or gave you a couple questions to think about, then share it with someone else who's curious about investing. And don't miss the next episode. I will be talking all about why the Cayman Islands is a hotspot for investors alike. Don't forget to follow so you don't miss the next episode. Thanks for listening to Beginner Meets Pro Business Insights. I'm Ryan, and this is just the beginning of our journey. See you next time.